Welcome to Your Business, Your Life with Matt DeFrancesco, your personal financial technician. Whether you've had years of success in your business or just starting out, Highlift Financial can help you create a vision for your business, life, and family, and align these for generational wealth. So as they say, what happens in your life affects your business. And now, on to the show.
Before we jump back in, can you share with us again, Matt, about you, your company, and then we're going to jump into other things.
Yeah, sure. So again, it's Matt DeFrancesco. I've been in financial services for the last 16 years, and my focus has been with the small to mid-sized family business, kind of helping them to navigate all the intricacies of that business. And my particular focus now is in the automotive repair, or automotive collision space, but I work with a number of different family businesses that are out there. So that's why I think this stuff is so important, because many times, many family businesses have never really thought beyond what's happening on the day-to-day basis. And these are really critical things because, life throws wrenches to you, and you need to be prepared for that to both not only protect yourself, but to protect your family and your business. So that's where I think a lot of these considerations come in.
All right, perfect. And I think, your written continuity plan basically needs to be stored away with all those emergency documents. And that is part of that 911. But I know you started mentioning how, that written continuity plan really starts encompassing some of the other stuff that's on our pie chart here. So if, you start with the written continuity, most important, where do you go next?
So I would say that the next step, and it really, again, is going to depend on where everybody scores. Now, what's interesting, this is what's going to be kind of fun here, because we're going to actually be talking you through your own.
Yeah.
So your next two highest scores was about maximum price, minimal taxes, and your exit objectives. And so I'm kind of curious, and I'm going to throw this question at you, Hannah, is why do you think you scored high in those areas?
So for maximum price, minimal taxes, I can probably tell you exactly why we scored high there. I think as a new business owner, we all kind of struggle with how high should we price? What is our value? We go through a little bit of maybe imposter syndrome. I know is a big thing of, am I charging too much? And should I lower my cost? And so I think that's where we were a lot with our pricing. And then I took this right in the midst of tax season.
I got you. Right. Okay.
We're sitting here thinking, how do we lower our taxes? And honestly, we have a really great CPA who I was shocked at how little we had to pay on our taxes this year, because I paid less this year than I did last year. And last year, I was not a full-time business owner in 2020.
Oh,
where we were in 2021. So I never worked for another person in 2021, and we were able to pay less taxes while making more money.
Okay.
And so but I didn't have my final thing yet. So our CPA is amazing. But I think, regardless, as we keep growing, we're constantly thinking, how do we pay minimal taxes? Because, it's a huge thing that we'll have to pay. And it's not trying to evade taxes in any way. It's just trying to pay the amount that, is required, and not just giving money away.
Exactly. And so, and I'm glad you clarified that, because so typically when you're looking at that maximum price, minimal taxes, that's really, and again, a prospect or a client might score that way with the same considerations you have. So that's why we need to have the conversation about this. Normally that would be talking about, okay, we're looking at exit planning. So how do we maximize the price that we're going to get for the business by minimizing also the taxes that we might have to pay on the transaction? But you'll see, like one of your second ones, it's this one right here, where it says tax minimization. That is really more of a concern for you. So, and that's why we would have to have the conversation over this. It's not just like, okay, we're going to take this and this. Okay, this is how things run. I need to get into the client's head on why they answered certain ways, So really, like in your case, we're looking at, first off, where do we stand as far as other businesses, from maybe how much we charge, what value do we provide, maybe where we stand from a valuation on our company. So the second part of the project, the initial project that we do, is we'll do a basic business valuation. Now, I want to stress that this is not a certified business valuation done by a CVA. It's really more of gives us a general sense of where the business is.
Mhm.
But I utilize software that actually has information from hundreds of thousands of different businesses using SIC codes, NIAC codes, and kind of tells here's generally where we stand. We use the tax return typically to input the information, and we can get a basic valuation on the business and also rankings where you score within your specific industry.
Mm-hmm.
How are you valued, high or low, or where do you rank on these things? So I think that does two things. Like in your case, I think that'll give you an idea of, okay, so where do we stand compared to some of the other, the bigger shops? The other thing you would have to look at is, again, what value are you providing? Sometimes, even in the collision space, there's a big push for consolidation. These big, they call them, they're MSOs. They're multiple location owners. Okay. Mm-hmm. And there's some big boys that are playing. And, but you still have your independent shops that are out there. Well, the problem is that sometimes when things get bigger, it loses a lot of the personalization and a lot of the customization and a lot of the customer interaction. So, that can be a value too. So those are all things that you'd have to evaluate. But I think doing the business valuation then gives most clients, I find, have no idea what their business is valued. They have no clue. Okay. And I remember it was funny. I had a peer of mine. She actually was in a collision shop getting her car repaired, and she was talking to the owner, and somehow he brought up he was going to sell the business. And she goes, "Oh, how much are you selling the business for?" He said, $1 million. She goes, "Oh, why $1 million?" He goes, "I don't know. I just think that's a good number." All right. And actually it's funny as businesses are looking to exit, a lot of times they base the number, put their valuation. This is what I need to get based off what they think their retirement needs are. Okay. So they want to have a certain amount of income in retirement. And so here's how much money I would need. But what they don't take into consideration is, first, is the business worth what that number that they have? The second thing is, have we taken into account taxes? Okay. So you sell the business for $5 million, but you have 20% capital gains on that. So that's going to reduce that down. Then you have, other taxes and you have to pay broker fees and all these things. And all of a sudden that 5 million now goes down to 2 million, and you'd already counted on the 5 million as your number. Okay. See where that's the problem. So that's again, where we can help by getting a sense of what the business value is. Now we know what we're working with.
No, that's very interesting. And I know you said it's not like an official certified business evaluation or anything like that. But I think, for me, I'm not looking to exit anytime soon. So when you start looking at evaluations of your business, are you basing that kind of off the revenue you're making every year? Are you basing that off the actual profit of the business? Like what could you look at as an estimate to help you gauge those things before you go to a certified person?
Well, that's where our software comes in, because what it's going to do, we basically pull information off the tax returns. And again, it'll be, your overall revenue. We typically like to use 3 years worth of tax returns to give us a very decent sense on where the business stands. But again, we'll look at revenue, we'll look at accounts receivable, we'll look at accounts payable, we'll look at cash on hand. I mean, there's just all these different factors. Typically, businesses their valuation is based off a multiple of what's called EBITDA. Okay. And that's, income basically after taxes, depreciation, all those things. But again, that can be easy. That's just a formula. You can compute that. What we don't know is what the multiple is. Okay. So, for example, one of my clients, they own a propane business, and they know, because in a propane business, the multiples anywhere is 5 to 10 times revenue. Okay. So that's pretty clear cut. Collision industry, it's all over the board, because again, it's going to depend on where you're located, what specializations you have, what certifications you have. Do you have any proprietary systems that are, I've got a client of mine who's very, very successful. Okay. A very successful shop. He's got systems in place, but he's in a rural area, and that affects his valuation. Okay. So again, that's where the software comes in, because we kind of plug in and we can get a pretty good sense on what the valuation is on the business. Okay. And that again becomes part of the building block as then we start to put plans in place. And eventually, once we get to the point where now we are looking at exiting, now, yes, we want to get a CVA, certified valuation accountant that'll give us what, a true valuation that would stand up in a court of law. Okay. So I think tax minimization, but that's a huge one because, most business owners, that's their biggest concern. And a lot of times that's their biggest expense. And I think a lot of times, what the business owner does, and I mean, be very thankful you have a good CPA, because it's amazing to me. I run in a lot of times where people don't, sometimes a lot of CPAs tend to be very myopic. They're kind of looking at that tax year and they say, okay, we've got to reduce income, go buy some more equipment. We'll depreciate it. One of my clients who has an excavating company, every year they were like, okay, we'll buy some more trucks. And like in their case, because they were an excavating company and we're in West Central PA where we have pretty harsh winters.
Yeah.
So they'd go buy these trucks. The problem is they're not really digging January, February, March. So that's when they're bidding on jobs for the spring and summer. And the problem is they have to get bidder bonds to bid on these jobs. And the bonding company says, okay, so let's see your balance sheet. And they're like, well, you don't have any cash. And they're going, yeah, but we got this brand new truck that's over here. Okay. But they don't care about that. So there's a lot more effective tax strategies that a business can use. And so that's one of the things that we want to look at. I mean, I told you in the beginning, I started my business selling 401k plans, and a retirement plan for me is like the foundation of our tax minimization strategy, because we can do two things with it. One, we can funnel income, both reduce our personal income tax and corporate tax into the plan. And we provide an employee benefit to our employees, because employee retention, especially in these days, is huge. Okay. So that's kind of from there, we might do a 401k. Then we might add a profit sharing that's in place. Then if cash flow is really good, we might look at cash balance plans. We might look at different types of what we call non-qualified deferred compensation plans. If we've got key employees, we might look at ways that we can kind of create, they call them like almost like golden handcuffs. So it's a deferred compensation plan that if the key employee leaves, they lose it. Okay. So there's an incentive for them to stay there, and you can build those in very tax efficient ways. So that's really when we look at tax minimization, those are some of the strategies that we want to put in place. So if a client's scoring high, and actually in your case, even though you scored over here on this, what your real concern is over here.
Okay. And real quick, before we jump over to tax minimization, I know you talked about having that system that, if we were to come in to get a business evaluation, we could, not an official one, but to be getting a good enough estimate to use that tool. And I know you work specifically in automotive, so I want to make sure all the listeners know that like the tool you're using is across industries. It's not.
Oh yeah. Yeah. So what we do actually is, as it comes in, initially we'll put the client's name, and then specifically we'll use the NAIC code for their specific industry. So we're getting a read on what it is within that specific industry.
All right, awesome.
And I do this for a lot of different industries, not just collision.
All right.
Okay. Collision's actually probably one of the harder ones, because there's, we can put it in there, but it's, again, there's so many other factors that are involved that it's not going to be quite as accurate. So again, that's where I have partners of mine who do more formalized valuations. But that would, to me, don't spend the money on that until you're at that point where you're like, okay, we're really looking at exiting. Does that make sense?
No, that makes 100% sense, because we're not looking to sell our business right this second. So why would we want to have an official, like a certified business evaluation when, just knowing, I think everybody likes to know where they're at. It's like a game you're playing. You're competing. Yeah. And so it's kind of like, I want to know where my estimate is. And so that's why I was it's interesting to see, where do I stand amongst the competition, especially with entrepreneurs, because you hear all the stats of, so many entrepreneurs fail, or this many entrepreneurs aren't even making the average income others do. So I think, it kind of helps just motivate people in a way too. Because, you hear like, oh my goodness, we're doing better than 40% of people in the marketing industry, per se. And it makes you want to play that game harder so they can get to the 60%. But I don't think you need a certified business evaluation yet, unless you're looking to sell in the next 5 years. Maybe like, what is a good time to start? Is it the 5-year mark, or do you start planning ahead, like as soon as you know you're going to retire in 10 years?
Usually about the 5-year mark. I mean, I think even the general one works well at 10 years. Once you start, and here's where it really comes down to, and this is, as we kind of go through this, I think it'll start to come together, make a little more sense. Because so let's say, for example, as we've evolved this plan and working with the family, and we find out that nobody in the family has any interest in carrying on the business. All right. And so it becomes very clear that the option is that we need to sell this business to a consolidator, to a private equity firm, to who, maybe a larger competitor, somebody like that. That's where, again, now we'll say, okay, now we have to start putting those things in place. And that's where I'll bring in a specific M&A expert to work with the client. And then at that point, I kind of work as their point person, because I can speak the M&A language and then I can translate it to the client. So now I'm basically providing a clear line of communication between all of them. And I also know the goals that the client has, where I can help direct the M&A person to provide the best opportunity for that client. So that's the one thing I always say. You're not just getting me to do the financial planning and the business planning, but you're also getting my team that's behind me, and I help to work as their financial quarterback into implementing these solutions.
Yeah, you're basically the coordinator. Yeah, no, definitely. You're coordinating all their finances so that they can, maximize that profit through valuation by minimizing all the stuff, and just getting that plan set at the right time. So no, answer.
Exactly. Well, again, maximizing price, minimizing taxes is always something that's important to people. But in the next episode, we're going to be discussing exit planning and value drivers. So even if you're not looking to exit your business anytime soon, like me and my business, you're going to learn how to start planning to secure a higher value in the future. I mean, the more time you give yourself, the better you're going to be able to set yourself up for success when that time does arrive. And also, each person's financial plan is different. So if you want to take the assessment that Hannah took, go to our website, highliftfinancial.com, and click on Let's Talk. I give everybody a half hour of my time. We can discuss your personal situation and then see if the assessment is the right thing for you. So with that, we'll look forward to seeing you next episode. Take care and God bless. Hey, I really want to thank you for listening to the Your Business, Your Life podcast. If you want to be notified when new episodes become available, click the subscribe button below.
The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of High Lift Financial. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investment, legal, or tax advice. Always seek the advice of your financial advisor or other qualified professional with any questions you may have regarding your business or personal planning. DeFrancesco Financial Concierge, LLC, DBA High Lift Financial, is a registered investment advisor. Registration with the United States Securities and Exchange Commission or any state security authority does not imply a certain level of skill or training.